point you've raised many times, and we had a bad report today from Realty Track. In fact, the foreclosures are now, let's see, they're running half of 1% of all the mortgages are now in foreclosure, 1 out of 194. Now, that number has gone up a lot. The biggest areas, of course, California, Arizona, and Florida. The Mortgage Bankers Association suggests 2% of mortgages are in foreclosure. That's about 1 million loans. Be that as it may, I guess what I'm asking you, Herb, is, insofar as this possible shift in Fed policy with one and done, the road to easy money, as I call it, is coming to an end, and maybe we're going to return to some kind of king dollar. What's the Fed thinking if they do that? In other words, you as an absorber of Fed information and so forth, is the Fed telling us that we're not in a recession, that the economy's not so bad, that the housing crisis is overbaked? Is that going to be part of their thinking, or is it a straight inflation worry? I'm trying to figure out, what are they going to tell us if they say tomorrow, one and done?
Look, as proudly as a reporter for a few more days, I will say they're telling you they don't know what the heck is going to work, because what they did before didn't mean anything. And I have to say this one thing on the prior argument that Joey B was in, and I support Joey B fully here. Let's not forget, a bunch of Nobel laureates, Warren Buffett, they're all telling us we're in a recession. Hey, I'm just a reporter.
Please, those same Nobel laureates who ran long-term capital management,
please,
same Nobel laureates who were all just on the Clinton and Obama campaign. Give me a break, Herb.
Oh, Don, the fact, oh, by the way, Don.
Herb, the Nobel laureates who say we're in a recession get on TV, and the ones who don't get on TV.
Well, let me ask you, what about that guy?
And if they're the authorities, let's have them get on this show instead of you, Herb. What is your opinion? What is
my opinion? My opinion, as I told you last week, is I do believe we're in a recession, because I can go outside and take a look around the block I live in, for God's sakes, Don. And let me tell you something. When you see the gas prices at $4.16 a gallon, if it ain't the first quarter, and unless those gas prices come stumbling down, I guarantee you we're going to definitely start seeing signs of the numbers that are going to show you we are or were in a recession.
All right,
so now it's a forecast, whereas just a minute ago you said you fully agree with Joey B that we're already in a recession. So which is it?
Hey,
a forecast or a foregone conclusion?
Look,
Make up your mind.
You know what? I really appreciate those kind words you had for me in your blog this morning. That was really great over the past few days. I really do appreciate the publicity.
Like the one on your blog where you called me a crackpot?
No, I said some people might call you a crackpot.
Gentlemen,
very big difference.
Gentlemen, let us stay on message. You're doing extremely well. You're making a lot of important points. While you take a breath on this, I want to put consumer confidence about inflation expectations. This is consumer inflation fears from the Conference Board survey. I believe we have the full screen chart. Has moved up to nearly 7%. Nearly 7%. Now, Jerry Bowyer, I want to go to you, because I don't think this is the greatest measure in the world. Well, that's the overall consumer confidence, which is down to recession levels. But I think we have the consumer inflation expectations, if we can get that up on the full screen. But Jerry Bowyer, do you think the Fed is going to take this turn? There's your inflation expectations. Look at that, baby. It's gone from 3.5% 12, 13 years ago all the way up to 7%. And, of course, it's spiked a lot in recent months. Jerry, the Fed is often criticized for trading off inflation versus growth, or inflation versus unemployment, the so-called Phillips curve. What I'm interested in here, just a little bit, you know, pre-game chatter before the Fed gets to us tomorrow, if they stop their rate cutting, if that's going to be in their statement, if they say we're going one time and then there's going to be a pause for the end of time, which is what I hope they do, is it fear of inflation, or is it possibly fear of inflation, plus they are now seeing signs that the economy may not be so bad in the second quarter or the third quarter, even with the rebates coming? How do you read that, Jerry? How should investors read this change of heart from the Fed?
I think what they ought to do is, I think that investors ought to definitely look at the statement. I think it's fairly likely we're going to get 25 basis points and then signaling an end. I agree with Don Luskin. They should do no cutting tomorrow. In the best of all possible worlds, they would start to talk about hiking rates. I don't think they quite have the guts to do that.
Well, the market is saying that. The market is actually saying that right now. The market is building in rate hikes, which I find fascinating.
But not tomorrow, but like by the end of the year.
Right.
And I think that's great. And you know, if someone watching this show would have expected that, if someone watching any other show would say, I don't understand why that's going on. They definitely went too loose. They might go a little bit looser. If they go down 25 basis points tomorrow, couple things will happen. One, it will be much more probable that they'll hike before the end of the year. You'll see the futures market shift, that the market will get that. If they put even more liquidity in, they'll have to take it out faster. And the other thing is there will be dissenting votes. There will be votes on the FOMC that will say, we don't, even though you're cutting today, we don't think you should cut.
Sure, Dick Fisher, Charlie Plosser, there may be some others. Joe B,
right.
Joe B, take me out of this. You all are coming back. Joe, what is your, given your recession outlook, which, okay, I respect your point of view. I don't have to think there's a bad recession, but whatever. Joe, what is your take on this market forward expectation that short-term rates are actually going to go up? If not by the end of the year, certainly by 2009. I mean, is that a disaster scenario? Why is the market thinking this?
Well, the market's thinking that because there's a full expectation that we re-accelerate in the second half of this year. But I don't see it because the consumer balance sheet is so strongly damaged. Home prices are still falling. And for May to July, we have more resets coming on, which means more write-offs. So bottom line is the economy doesn't come roaring out of this. And then the Fed stays at a low rate longer, which perpetuates some of this inflationary tendency, because clearly Bernanke is an apologist for growth, and he's going to stay low for as long as it takes. I don't see a big, fast recovery.
Let me just get a very quick whip around. One word, bull or bear, right this instant. Bull or bear. Don Luskin?
Bull.
Jerry Bowyer?
Bull.
Bull. Herb Greenberg?
Bear.
Joe B?
I'm essentially neutral right now.
Neutral. So we got two bulls, a bear, and a neutral.
Well, if you said I could be neutral, I would have been neutral. But you said bull or bear, so I'd go with Joey B on that. Definitely neutral.
Actually, let me revisit that, Joe B.
Profile and courage.
Joe B, here's the...
Tell Herb he can
Joe
be
B,
maybe
this
neutral.
is a binary choice, bull or bear.
I say you stage your investments towards risk as the year progresses because you'll get opportunities to buy. It's not a clear situation where you stand today because the volatility is going to be quite high.
All right, the panel's going to stay with us. Coming up, President Bush did the Texas sidestep today on the economy. He talked a lot, but kind of struck out on the dollar and ethanol and the gas pump and food prices. We're going to have to pick up where he left off. He had some unfinished business. We'll be happy to help him.